You're watching Dukascopy's Targets in Focus, and today I'm joined by Ian Stannard, FX strategist with Morgan Stanley, for a dollar-themed programme in light of Barack Obama's winning a second term as President of the United States. Now, Ian, the dollar fell today after Obama's re-election was seen to be ensuring Federal Reserve quantitative easing will stay in place. But what is your take on how the markets in general have responded to today's events?
Well, I think initial response was one of relief with regards to the fact that we had a clear result from the election and that there wasn't any delays to the results. So that initially provided some support to the pro-risk currencies and pro-cyclical currencies, but that is now fading fairly quickly. And I believe that the increasing risk events on the horizon are likely to keep the more pro-cyclical currencies under pressure in the near term. Longer term, I think we are going to be, or markets will be more focused on the individual country fundamentals, and there will be a greater degree of differentiation between currencies rather than taking a broad brush approach, which has been a driver of markets recently.
If we look at your first chosen pair, I understand Morgan Stanley are maintaining their bullish strategy for the dollar yen and expect a retest of the 80.70 high. But what do you think will be the main factors driving it forward?
Yes, for dollar yen, we think the environment is changing quite dramatically and becoming far more favourable, both because of developments on the US side of the equation and in Japan as well. In the US, we believe the Fed's quantitative easing policy, the fact that it is now targeting specific economic variables, is going to provide a lot of support for dollar yen. And on the Japanese side of the equation, we see some very dramatic developments. While next year we are expecting some fairly significant changes in the policy front in Japan, both in the government and in the BOJ, the near term we're also seeing a change in flow dynamics, with money market outflows starting to gain momentum. So again, we believe this is evidence that the Japanese yen is starting to be used as a funding currency. So as we see the first signs of stabilization in the growth outlook in Asia and the first positive signs emerging, which could well provide some support to regional asset markets, this could well put the yen under increasing pressure and start to provide support for dollar yen. So we believe that this dollar yen rebound is going to be sustainable. We're not expecting a sharp move higher, but I think a slow, steady recovery is now underway.
The pound dollar was back above 1.6 on Obama's win. However, the Bank of England's Monetary Policy Committee meet tomorrow after poor empirical data. But what are you expecting from this meeting, and how will it affect this currency pair?
Yes, we are still very cautious on sterling. We think there's a number of factors which suggest that sterling is likely to come under pressure. At this point, it looks very much as if the rebounding Q3 has run out of steam, and we're likely to see some renewed softness in the growth outlook in the UK. So policy may well respond to that. So the Bank of England may well have to ease policy further, may have to extend quantitative easing. Now, that may not be forthcoming at the current meeting, but I think even if they do pause, the Bank of England will have to restart its quantitative easing program once again in the new year. So this is likely to put sterling under pressure over the medium term. Also, we look at the UK's fiscal position, which is going to come under the spotlight, we believe, during the Chancellor's autumn statement, which he gives in December. Now, the Chancellor and the OBR are likely to have to reveal new forecasts for the UK economy, which show a significant downward revision to the growth outlook and some further slippage on the fiscal front. This, again, is likely to prove to be a negative for sterling.
With the US election out of the way, investors are expected to turn their focus on the Euro's debt crisis once again. So what impact do you think this will have on the euro against the dollar in the short, mid and long term?
Yes, there's quite a lot of events currently unfolding in Europe which is going to have quite a big impact on the euro. Now, the ECB's OMT program has provided some stability to peripheral asset markets, and that has helped to provide some support for the euro. Now, the continued support from that is very much dependent on the OMT program now being activated. And for that to happen, we need the Spanish government to come forward and seek some assistance from the EU to unlock the OMT program. But at the moment, the Spanish government are showing some reluctance to come forward in a preemptive manner. So while we have been positive on the near term for the euro, in anticipation of the ECB's OMT program coming into operation, longer term we remain negative on the euro, as the growth outlook, we believe, is still going to remain very weak, and we're likely to see the euro coming back under pressure next year.
Ian, thank you for your insights. Well, that's all we have time for at the moment, viewers, but for more fundamental analysis, please do keep clicking back to Dukascopy TV. Bye for now.